If you are setting financial goals for 2026, understanding what is changing with money, taxes, housing, and investing is just as important. There are a lot of policy shifts and new tax rules and a lot of proposed housing reforms. And all of these new changes affect how you invest your money, how much money you keep, how you're going to manage your money, and even when you're going to buy real estate. So today we are going to do a quick dive on everything that is changing this year. So that way you can make educated financial goals this year. And I'm also going to talk about some of the proposed changes that haven't taken into effect, but it's still helpful to know. So that way you are not caught off guard and you could start planning for them. The first big change is interest rates. It has been a hot topic over the past few years, especially with, housing affordability and high mortgage interest rates, especially since some of us got kind of a little bit spoiled with the low mortgage interest rates that we had a few years ago. Now, over the past years, so the Federal Reserve has really been aggressive with interest rates, raising them because they've been trying to combat inflation, and now they have started easing off of that and started to bring it down. Now, while this is going to obviously support economic growth and start stabilizing the market, it doesn't mean that you're going to see the effects right away. But that's not the case because it kind of lags a while from when it was cut, and then it takes some time for mortgage rates to start coming down. So what does that mean for you is that if you are buying your first house or your next house or an investment property, you're not going to see it right away in the housing market. You'll see a slow downhill. But here's one thing that I want you to take with you in 2026, because a lot of times we are wanting to wait for the perfect market, wait for the perfect mortgage interest rate. And again, you it might not happen right away. It might not even be this year where the mortgage rates come down to where you would want to. And you want to remember that waiting for that perfect rate or the perfect market conditions for investing or buying a property, that also comes with a cost, and it comes in cost of missed opportunity. That, for example, your house, that's, time that you could have been in your house, not paying somebody else's mortgage in terms of renting a property, or starting to build equity in your own home. For real estate investing is the same similar things. You're missing out on equity, you're missing out on cash flow. So all of that also comes with a cost when you miss out. So don't wait around for the perfect rate. Just find something that works for you, that's within your budget, and go for it. The next one is high yield savings accounts. Now, with high yield savings accounts, we know that they give you a better return, a larger return on the money that you have in there versus a regular bank account, a bank savings account. But you will notice that now that the rates have started to come down, that the annual percentage yield, APY, is also going to drop along with it. Now, it's not going to happen right away. Similar with mortgage interest rates, it's going to be a slow trickle. I remember when I first got my high yield savings account, it was like at 5%, 5.013, I think it was, or something like that. But it was high, and now it's gone down to 3 point something. I haven't checked on it, but it's going to continue, dropping. But the thing that I want you to keep in mind is that having your funds in a high yield savings account is still way better than having it in a regular savings account at a bank. Because even though, let's say it's 3%, 2.5%, it's going to be better because most banks don't even give you 8%, not even half a percent for the most part. So if you are saving for like a down payment for a house or just having your emergency fund, it is still better to have it there. And if you don't have a high yield savings account, then this is a year to get one. I will have that information in the description, the show notes for you. Okay, the next big major change that you want to know about is the taxes. There has been some quite a few changes in 2026 that have gone into effect. The first one being that the IRS has adjusted for inflation the tax brackets. This is going to affect how much you pay and how much you can deduct. There are several changes that are taken into effect that came from the One Big Beautiful Bill. And they impact your take home pay, your deductions, retirement planning, and even estate strategies. Now, here are the 2026 federal income tax brackets. Now, the IRS adjusted for inflation, but they did a 2.3% increase. Now, it might not seem like a big increase, but you want to definitely verify that you haven't gone into the next tax bracket. So that way, if you did, you can start planning on how you can reduce your tax liability. Another change to taxes is the standard deductions that you can take. So in 2025, or married filing separately, you had 15,750, but now it has gone up to 16,100. Now, if you're married filing jointly, it went from 31,500 to 32,200. And heads of household also had a small increase. Now, I don't want to get too deep into taxes because that is outside the scope of my expertise. But other things that you want to look into is that there is a higher cap on state and local tax deductions for qualifying households. And now there is a no tax on tips and overtime. For tips, the maximum annual deduction is $25,000 for the year. And for overtime, you can deduct up to $12,500 for single or $25,000 if filing jointly. And if that applies to you, make sure you go to that IRS website. I'll have it linked in the description and in the show notes so you could get more educated and know all the tea. And the last tax related change that I want to talk about as a first gen immigrant, because a lot of us send money to family members, especially like our parents send money to their parents or family members in another country. Now there's going to be a 1% tax on money sent over, to another country. So this is something to keep in mind and to account for if you are someone that is sending money to family in another country. And you want to make sure that you really understand what affects you, because this is going to affect how much you owe next year, how much tax liability you're going to have, your tax planning, and for wealth building. Now let's go into talking about housing and real estate. As a real estate investor, this is my passion. So this is things that I'm always looking at, and there's a lot of talk and things that are being proposed. For example, one of the big things that they are talking about right now is banning large Wall Street firms from buying single family homes, because we know and we have seen how big corporations have almost taken up neighborhoods in holding those houses and either flipping them to for a very large profit or keeping them as rentals. And it really has affected home affordability. And so that's one of the proposals that is being talked about. Another thing they are talking about is being able to take money out penalty free from your retirement investment accounts. Now, with some accounts, you can already do something similar. You basically take a loan, but you do have to pay it back. Otherwise, you get hit with a penalty. But here they're saying you could just go ahead and take it out without any penalty, so you don't have to worry about paying it back. They're also trying to look at reducing regulatory barriers for builders to be able to build easier and faster and increase housing supply. But let me tell you one thing, when you remove like regulations that are there to protect home buyers with the regulations and stuff. Like there's a lot of builders. You could go on like TikTok and stuff and follow like these home inspectors, and they will go to like new construction and find so many things wrong with that property. And that's with the regulations, because at the end of the day, a lot of these builders are all about the money. So that if you reduce these regulations, I have zero faith that they're going to do the right thing and still provide a good and safe house. They're just going to be like spitting them out. So I don't know about this one. I feel like it is something that is just going to have a negative effect, and a lot of first time home buyers are going to end up with homes that they're going to have to put so much money into to fix. So I'm never a fan of reducing regulations because, and this is kind of biased of me because I was a safety inspector, and I know that a lot of these regulations and rules and safeties, there's a reason that they were implemented. So then to reduce that, I just know, I just feel like it's going to be a big disaster. And one of the last things that I want to talk about with real estate is that the housing market obviously is not a big drastic change, but there are some trends that you can see, and I've seen because I've been looking for another investment property. So I've been kind of like at least weekly, if not almost daily in some at some points that I was looking at these properties, and I've been noticing that some properties have been sitting longer. Prices have come down, some of them drastically, and there is a little bit more of negotiation. Matter of fact, I was working on a deal and there was a lot of negotiation and there was a lot of leeway. Unfortunately, last minute a cash buyer came in and won it. So I lost that one, but I am still looking for another one, and I'm already like assessing one that might be a potential. But sellers are more open now. So I am seeing a change where it's becoming a little bit more balanced, which means that if you're looking for a house, if you're looking for an investment property, even though the interest rates might be a little bit high, they are coming down. So that's one good thing. Housing prices are slowly starting to come down. In some areas, they're dropping more. And investment properties, same thing. The sales price is, I see cuts going. The downside, which can be an upside depending on which side of the coin you are on. If you are a renter, I have seen rental prices start coming down. Matter of fact, one of my rental properties, I came down on the rent for a new tenant, which doesn't bother me because I had calculated my cash flow for a certain amount, and I don't ever go at the very top. So I have been seeing that as a real estate investor on the landlord side. That is something to keep account. So if you're looking at investing in a property, don't go out there assuming that you're going to get top market rent, because they are starting to come down in some areas. Now, there are a few more changes in 2026 that I kind of want to just briefly mention. So there is the Trump account that's going to be open for a child, an eligible child. Basically, the federal government is going to make a one-time $1,000 contribution for each child, and employers can contribute up to 2,500 per year towards an employee's or dependent's Trump account, and is not going to be counted as taxable income for the employee. Now, those funds can be invested in like mutual funds or the SP 500, the stock market. There's also some changes in the health savings accounts. So if that applies to you, definitely go check out what those new changes are, because there's quite a few on like telehealth and remote care services. There's also some primary care arrangements that now you can contribute to, and just a few other things. So make sure if that applies to you, definitely check it out. Again, that's going to be down below. Lastly, one other change that is interesting is the no tax on car loan interest. So you're going to be able to deduct the interest paid on a loan for a qualified vehicle that is for personal use that meets the eligibility criteria, and that's an annual deduction max of $10,000. All right, so those are the big major changes that I want to talk about. So basically, a quick little checklist. Make sure you are reviewing your tax withholdings and your deductions. If you are looking to buy a house or an investment property, just keep an eye on the housing market and any proposed changes, especially the ones that they've been talking about, to see if they pass or not. If you're a real estate investor, definitely check what's been happening in real estate and see what they may be coming up with, because that's going to affect your strategy and your exit plan. Also, check out the retirement contributions, which I didn't get into it in this episode. I'll link down where I did talk about and go into what the contributions changes are for 2026. Let me know what changes are going to affect you, what you're excited about, what you're not excited about. Let me know down below your thoughts on all these changes or the proposed changes. But other than that, I will see you in the next one. Bye.